to bring back Chris Kotowski. He's from Oppenheimer, taking a look at these results with us. And Chris, Eric just a few moments ago had pointed out about this drop in trading revenue. And we've seen that at other banks, but it seems to have been hit, it seems that Citi is suffering more from this.
Well, I'm not sure that they're suffering disproportionately. I mean, the numbers from JP Morgan on Friday were weak too, and I'd expect them to be weak pretty much across the board. And I think what happened last year is that most fixed income investors had a good full year in the first 3 quarters, and they just kind of shut it down shortly after Labor Day. And so it was really a very inactive fourth quarter. And I'm not sure that that has great implications for the future.
Hey, Chris, it's Adam. Great to have you here today.
Thank you.
The credit losses, 8.1, that's what they had to set aside. Not as much as the previous quarter, which is 9.1, but that's still a big number. When are they going to stop having to set aside money for bad loans, do you think?
Well, actually, I mean, it looked like the charge-offs dropped from about, I have them 7.9 last quarter to about 7.1. So the actual loan losses went down by a couple $100 million, and that happened to actually be earlier than I thought it would. So I was pretty encouraged about that. And also, I mean, the thing is, you have to recognize these big banks. It is like a steamship. It takes a while to turn around. And to my mind, the key numbers to keep in perspective are what are the pre-provision earnings doing on a clean basis when you sort out all the charges for TAR prepayment, the CVA and DVA charges, and all that nonsense. What are the clean pre-provision earnings and what are the actual loan losses? And again, I don't have all those numbers yet, but
Chris, but overall, though, I mean, even with or without these numbers, and I know the numbers that you're looking for are still ones that you're combing through the press release on. But even so, from what you can gauge right now and what you've got, is Vikram Pandit's strategy in place here? Do you see a semblance of that?
Well, yeah, I mean, he's trying to split the company up into a good core, healthy piece where the businesses that you want to operate on a long-term basis, and assets that you want to sell. So, I mean, does that part of it make sense? Yes. They're trying to break the company up. How easy is it to do? How long will it take? All those things are still up in the air. And I guess my take on the stock is that we haven't been recommending it. And, quite honestly, I think the fact that the government still owns, 8 million shares, billion shares is an overhang on this stock. But that said, I think.
But are you closer? Are you closer to perhaps recommending it or not?
Well, I think it'll still take a while. And again, I'd love to see the government overhang be taken care of. But I'd be encouraged by the fact that the charge-offs were down at least. I think that's a positive.
That's a positive.
That's
for you.
a positive, and
Okay.
that's not to be dismissed lightly.
Okay.